I just want to start with some announcements first. Now in the presentation skills area, you'll see that if you go into the component B folder on video interviewing, hopefully, is it going to work? You'll actually see, if it does connect, it might not, you'll actually see now in the video interview section, there is a description of the assessment process. There's a little survey for you to fill out. Oh, here we go. Let me just turn it into the other mode. Come on. Oh, here we go. So what you'll see in there is information. So there's a PDF about the assessment task, how it's going to work, and the marking rubric. All right. So the marking, you will be marked mostly based on your communication and presentation skills. Everybody completes a little pre-task survey just so that I know how much experience people have with video interviews, if you have some or none. And then once you do this survey, some learning materials will become available. So once you do it, you'll be able to see there's an online magazine that you'll be able to work through. You can do as much of it or as little of it as you like. And that magazine has newspaper articles and HR journal articles and recruitment articles, and then some videos on how to give the best video interview you can. You can access that anytime up until the assessment starts, or even when the assessment is going. In week 11, so we're only in week 6, so a long time to go. In 5 weeks' time, the video interview assessment will open for 4 days. All right. I'll actually give you some information once we have the midterm exam about what 4 days it will be open for. Shh. But you have 4 days to complete your online video interview. Okay? Hands up who has access to a computer with a web camera at home or at work. Most people? All right. For those people who do not have access to a web camera and a microphone at home, there are a number of computer labs and computers within the university that have a webcam. What they don't have is the ability to record audio. So what we've done is we've bought a whole lot of headsets, like the little ones with the headphones and the little microphone. And there will be 3 separate days over the 4-day period where you can come sign out a headset for 2 hours to go do you can do some practice goes and then do the video interview. Now the interview itself is only about 5 minutes long, all right? But there will be some practice video interviews you can do before the actual assessment task opens, all right? But there will be 3 different days where you can come and borrow a headset or book in ahead of time to borrow a headset for 2 hours to go off and do your recording and then bring it back, all right? So yeah, you guys can start looking at that stuff now. I'll put the practice tests up this afternoon for you if you want to start practicing, but it won't be until week 11. All right? Now, if you feel a little bit uncertain about the task, who would like to have a practice go and have somebody mark a practice go and give you some direct feedback? A few people? All right. So what I will do is I will set up a specific practice one that you can do if you want me to look at it and give you some written feedback on your presentation skills and sort of have a live practice go. You don't have to. You can skip straight to doing the final one, but I'll set up a practice one specific to this subject that you'll be able to do as well. There are some generic practice ones and the questions are like from the 1980s. They're terrible. But I'll set up a specific one for you guys. All right. So this week, we are looking at the idea of sampling. So I'm going to put this into context, and obviously this is a menu where you would sample. You probably wouldn't want to eat all of these because that would probably give you diabetes. But let's look at the context diagrams. Now, have the context diagrams been helpful each week where I try and sort of put everything together in the big picture? Yes? All right. So let's go ahead and do this week's context diagram. We know, of course, that my output is my audit report. I know that to generate my audit report, I need to collect audit evidence. All right, this is all stuff we've done before, so none of this is really new. And I know that I need to use my audit strategy. Whoops. To come up with my evidence. So I need to collect evidence to generate my audit report. My strategy feeds into my audit evidence. And remember, my strategy is that one about detection risk is audit risk divided by inherent and control risk. And I know that I have two sorts of potential strategies. I've got my substantive approach, and I know I've got my controls-based approach. All right. And for each of those, I do my substantive when my detection risk is low, and I do my controls when my detection risk is high. Okay, I know I have to collect strategy, and I know that, I need to know about the business, so I need to have an ASA 315 understanding of the business to get my inherent risks, and I know that my control risks come from my little pyramid that I talked about last week. Okay, and that the audit evidence I know is affected by the idea about materiality, which is my dollar value idea. So my audit report and my evidence is affected by this amount of, how much do I think is going to be material in terms of my misstatements. I also know from my evidence that I use my audit procedures. All right. And I know that I have 9 of those procedures. Okay, let me see if I can go through them. Vouching, tracing, inspection of documents, inspection of assets, inquiry, observation, recalculation, analytical procedures, confirmations. Is that 9? Hang on. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, and I'm going to shrink that and put that just there. All right, so I know, oops, it's not quite straight. Here we go. So I know I've got my procedures that feed into my audit evidence. But the big question is, or the one that we need to answer today, is how much of this evidence do I actually need to collect? All right, so this is the big one for today. The question of how much, because I know that ASA 500 says I must collect sufficient and appropriate evidence. All right, doesn't say how much is sufficient, doesn't say how much is appropriate. So I have this really tricky question about how much. And so what we're going to look at today is the idea of sampling as a method to determine how much evidence I need to collect. All right? And sampling is going to be affected by the level of materiality. It's going to be affected by my type of audit strategy. And it's going to be affected by my risks that I see down here. Okay? So today we're going to look at sampling as this idea of figuring out how much evidence. And we're also going to touch on sort of procedures and documentation a little bit as well. So that's the context of where we're going to be. All right, let's get into our ideas on audit sampling. And so we're going to start with this idea here at the beginning from ASA 530. All right, sampling is when I do not test an entire group of transactions. I test some because there are too many items to test. All right, so my sample should be representative of my population, and my population down here is the pool of items that I'm going to gather my evidence from. All right, so I'm going to pick a sample. All right, so I'm here in this row, I've got these 3 lovely students here. And for the people listening at home, I'm looking at 3 female students at the front. And I've picked a sample of students. This is, we've got about 300 students doing auditing. I've got 3 here, so I've got 1% of the population of all of audit students. Okay? Now this is what I'd be doing when I'm auditing. I'm going to select a sample of some, and then I'm going to look at the sample and I'm going to make conclusions about everybody based on my small sample of transactions. Right? That's what we do in an audit. So, based on my sample of 3 students here, if I made a conclusion based on my sample, every student studying auditing should be female because all 3 students in my sample are female. Does that sound right? No. Special guys around the room are going, no, that's definitely not right. Based on my sample, is everybody right-handed or left-handed? Right-handed? All right. 3 people, 100% of my sample are right-handed. Therefore, everybody who does auditing is right-handed. Hands up all the lefties. Hello, lefties. Okay. And do you wear glasses?
Yeah.
Oh, but you're not wearing glasses today?
Contact
lenses. All right. So, based on my sample here, 1/3 of students should be wearing contact lenses and 2/3 of students should be wearing glasses. I see lots of glasses wearers. Hands up the contact lens wearers. That one might be right. The 1/3, 2/3 there might be an appropriate. Hands up who doesn't need glasses at all. Oh, okay. All right. No, so we're definitely wrong on the conclusion there. Okay. So what I did just there was I used a sample to make conclusions about the population. But my conclusions weren't very good, right? They weren't very accurate. So that is what it means when here I say my sample should be representative of my population. It means that when I select my sample, if I was selecting samples of audit students, I would need to make sure I have the right mix of male and female students. Actually, theoretically, I should have the right mix of male, female, and we now have a 3rd category called X, which is unidentified, unspecified, or intersex, is the official terminology. We should have the right proportion of those people. Hands up my domestic local students. Hands up my international students. So it's about 50-50, right? So therefore, if I was picking my sample, it needs to be 50-50 international and domestic students. Okay? Hands up part-time students. 1, I think I saw. 2. So that's everybody, plus the 20 people that turn up to my night lecture. So that's about 10% of students enrolled in auditing are part-time, 90% are full-time. So when I select my sample, I need to make sure I have that mix. So it's really important that when I select my sample, it's representative so I can make the right conclusions. All right. So certainly whenever you see opinion polls, 67% of people think Kanye would be a great presidential candidate in 2020. I would vote, if I could, I'd prefer George Clooney. Seriously, compared to Kanye. I don't know, the credibility of Kanye in terms of politics just doesn't fly for me. But if 67% of people said that they believed in him, the company that does the polling needs to make sure that they've captured people from all of the right states, in the right mix, right religious backgrounds, full-time, part-time workers, all that sort of stuff. So whenever you see surveys where they say 87% of people would use this shampoo again, right? Or 67% of people think that gay marriage is something that should go ahead, or 27% of people think that Tony Abbott should wear his budgie smugglers more often. We need to make sure that when we choose our sample, we do it really carefully. Now, there is risk in sampling. The risk is, what if my sample isn't representative, which is going to be our sampling risk, and then we have non-sampling risk, which we have human error. So sampling risk. Sampling risk is the risk that my sample is not representative, and therefore the conclusions that I make are going to be incorrect. So you can see up the front when I have my 3 lovely young ladies in the sample. They certainly made some bad conclusions about the composition of students within auditing. And we have 2 main consequences. The risk that the audit will be ineffective. That is, I've chosen the wrong sample, and as a result of that, I end up giving the wrong opinion. All right, so that's if it's ineffective. And the other one, the risk that the audit will be inefficient, is the risk that I'm going to be doing or gathering too much evidence, which results in lower profit on the actual audit. All right, so we've got 2 main issues there, inefficiency and ineffectiveness. Out of those 2, which one do you think is going to be the one that's most risky for the auditor? Number 1 or number 2? Number 1. All right, this is the one where I want to be really, really careful as the auditor, that I don't want to give the wrong opinion, because of course, if I give a wrong opinion, that wrong opinion could potentially expose me to what sort of liability? Legal. Yep, so I could be exposed to a lot of legal liability if something goes wrong with the company. All right, so if I'm testing, now this idea of sampling applies equally to substantive tests as to tests of controls. All right, now you know the 9 procedures I listed before? I can use any combination of those 9 procedures to gather evidence about whether controls are working effectively, or I can use those 9 procedures to gather evidence about whether an account is substantively correct or not. All right, so it's a big mix and match process there. But if I'm testing controls and I conclude that the control risk is effective, and I'm going to use some examples here. So really, if we're saying it's effective when it's ineffective, I'm saying if control risk is low, but it should be high. Then I'm going to rely on my controls too much, and I'm not going to I'll have insufficient substantive testing. All right, so that's that first one just there. If I say that they are ineffective, which is the lower one here, that the client is ineffective when it is effective, essentially what I'm saying, oh look, control risk is high when it should be low. All that's going to happen here is that I'm going to do a substantive audit when I could save some time and effort by testing controls. All right, so that's the difference between those 2. Here, obviously, this one with insufficient testing, this is the one that's going to lead you down the wrong opinion route. All right, whereas this one down here is the, oh, well, I spent too much time doing substantive testing. I could have saved some money otherwise. This is the low profit implication just there. All right. Now the same applies for my substantive testing. All right. So this is the same thing, but we're just doing substantive tests. So the first one, the auditor concludes that a material misstatement does not exist. So we're saying essentially unqualified. Let's do it this way. I'm saying unqualified opinion. Unqualified. When it should be qualified. All right, here I've done the wrong opinion. Whereas in the bottom one, oh, I make the client make an adjustment. Typically, that results in overly conservative financial statements. But that set of overly conservative financial statements is unlikely to send the client bankrupt. All right, you're telling everybody we're being more cautious, whereas this one up here, I'm saying, yes, there's no misstatements when in fact there are hidden errors I haven't detected. All right, so potential errors not detected. There. All right, what about non-sampling risk? The idea of non-sampling risk. And typically, I like to call non-sampling risk the human factor. All right, so this is my auditor's professional judgment, really, is what this comes down to. Let me just add that in there. Auditor's professional judgment. I've got the apostrophe in the wrong spot. Let me just auditors. Ooh. I think that's the correct grammar. Anybody a grammar expert? General auditor's professional judgment. So I could, by accident, use the wrong procedure, make the wrong decision about the evidence. I might fail to identify the most relevant assertion, spend too little time testing high accounts. And then there's also more of that human factor, right? This is the auditor is tired, the auditor might be grumpy, the auditor could be having a bad day, a rough time at home. Who's ever made a bad decision when you're overly tired or you have not had enough caffeine first thing in the morning? Me sometimes, all right? So non-sampling risk requires all of these sort of professional judgment things, as well as that human factor. Yeah? We're not machines, we're not robots, we don't do everything exactly the same every single time. So if I've had, at the moment my son's pretty good, except at 3 o'clock in the morning he wakes up and he thinks it's morning. So then I spend about an hour trying to get him back to sleep at 3 a.m. So I've had a lot of broken sleep. If I'd had a lot of that or my child was unwell, I might not make the best decisions during the day because I'm tired or I'm thinking about other things. So there is some risk there. How do I reduce both my sampling risk and my non-sampling risk? To reduce sampling risk, we want to do our best in the selection of our samples. To reduce my non-sampling risk, I have lots of policies and procedures in place within the audit firm. So I have training, I have supervision, I have teams working together to make sure that if I make a bad decision or a bad judgment, someone's going to check it to make sure and catch it before it turns into a bit of a disaster. All right? Now, here we're going to get into sampling, and sampling falls into two major components that I want you to think about. I'm actually going to add a slide. Well, actually, no, maybe I'll just add a thing here. So sampling comes down to two parts. Part A is the calculation of the sample size. Whoops. And part B is the selection of the sample items that you're going to test. All right? Now, squeeze it, make that a bit smaller so it fits in. All right. What I'm going to, the slides don't really, the textbook doesn't break it down like this, but practically, in terms of calculating sample size, you've got two methods. You've got statistical sample size calculation and non-statistical sample size calculation. Okay? So statistical uses the random number theory stuff and probability theory to calculate sample sizes using a mathematical formula. All right? The issue with this is that, and it says it can be costly to use, but the real issue with statistical sampling is extremely large sample sizes. And I did some tests a very long time ago when I was at PwC to actually check this out. And I calculated sample sizes for a client using statistical sampling, and it said something like, go out and collect 5,000 invoices. And I went, I do not have time to collect and gather evidence on 5,000 invoices, 5,000 receiving reports, and 5,000 purchase orders. That's not going to happen. So statistical sampling has its advantages in that I can actually calculate whether I am, for example, I can calculate that I am 95% confident that an account is free of material misstatement. I can calculate an actual confidence level. However, to be able to do that, I need really large sample sizes. And if I need to have people actually going out and collecting physical evidence, that's really, really difficult. If you have a company that has a lot of electronic documents, You might be able to do some statistical sampling and run sampling electronically, but this is rare. We don't do a lot of this. Now, I don't teach statistical sample size calculation. The reason they don't is, number one, it's not used very often in practice. Number two, every single firm has a piece of software that they use where you plug in the details and then you press a button and it spits you out a number. All right. So depending on where your firm is, there's slightly different methodology. So that's why I want you to know that there's different ways of calculating sample size, but I'm not actually going to go into the actual calculation of it. Okay. So there's statistical sampling. The one that auditors use most often is this one, non-statistical, where I use my judgment. And the judgment is normally, let's start with 25. And I've looked at a couple of different Big Four firms, and they all, and a couple of textbooks in terms of non-statistical sampling, and they all say, in the average company, start your sample at 25 for non-statistical sampling. If you find errors or issues, then collect another 25, but 25 seems to be the magic number. I don't know how anybody came up with 25. I don't know whether 20 years ago someone said 25 sounds like a good number, let's go there. And if somebody had chosen 21, whether we'd still be using 21 today. But 25 seems to be the practical number that seems to be used the most. It does say more likely to be used when the account is low risk, but most, if not all, sampling in a lot of audits these days is statistical. So remember before I said there's two things to think about. Part A is the sample, the calculation, and now here's the method, all right? Now you can actually mix and match. If I am using statistical sample size, if I'm using statistical sampling for my calculation of the size, then I must use random selection. All right, so let me add that there. If using statistical size calculation, must use random selection. All right, and this is where you use a computer to actually generate, here we go, to actually generate a list of items for you to collect. So this is all computer-based. It's not like I just open a box and select them. I must use a computer to do the random selection. Now, in the old days, you needed software. Now you can get apps. You can just download an app for that. When my students get put into their groups each week at the beginning of class, I actually use a random number generator to randomly put them into their groups each week. But the key with the random stuff is that each item has an equal chance of being selected. All right, so the computer might select 10 from the first month, it might select 2 from the next month, it might then skip a month and then select another 15. Okay, so the computer uses a random number generator to do the random selection. Now, the other thing that we can do is something called stratifying. And essentially, stratifying is taking a population and then breaking it down into smaller parts. All right, so let's say I've got my population down here, and then I might break that down. Systematic selection. So systematic selection involves us using an interval. All right, so let's say I've got, these are all my transactions, and then I select a transaction at a regular interval. All right, so I use a little formula to do that. That sometimes can be good. It sometimes does backfire, because if your error or your misstatement is also systematic, and let's say it's like this, you're always going to just miss finding the error if it's systematic. So it does have its limitations, but I can make it quite useful by doing a random order. So pick the random start point. Now this next one, haphazard selection, is the one that people are actually using in audit practice. All right, so haphazard is the human attempt at being random. You get a whole year's worth of boxes of invoices and you have to collect 25, so you just select 25, right? Try and select them randomly. Sort of some studies show that when you ask humans to select things randomly, they tend to try and do this interval thing, 2 from each month. But, just try and attempt at picking haphazardly. Even though this isn't the best method, theoretically speaking, it's the one that everybody does use. Are there issues in that? There can be a few. All right, the next one is block, and I'll draw the little timeline again here. All right, so let's say we have January over here, and we have September over here, and here we have the 30th of June. Okay, now block selection involves me going out and gathering evidence on a particular block in time. All right. Now, the situation in which I would do this one is if I was testing the cutoff assertion. All right, because remember, cutoff is about transactions in the right financial period. So there's no point in me doing cutoff back here in January. I need to do it around the end of the financial year. I need to look at transactions in the week before and after the end of the financial year and check that those goods were actually delivered so I can recognize them as sales. Okay, so block has its usefulness. I could use block to test completeness. So who's ever seen one of those pre-made receipt books from Officeworks? You go to a market stall, you buy something and they handwrite you a receipt. They tear off one copy and give it to you and the little carbon copy is written underneath. And each of those receipts is individually numbered. If you wanted to make sure no receipts were missing, you could go through a month's worth of transactions and check each number in the sequence is present. If a receipt is missing, could that be a sale that's not recorded or a sale that's incorrectly recorded? So there I can use block selection to help me test the completeness of numbering as well. And then the last one is judgmental, and this is you use your own judgment to make a decision on items to investigate. All right, and that's quite common. I often would look through the items that might be claimed under miscellaneous expenses at companies because you can find all sorts of weird things in there. I once found something that was claimed as an entertaining lunch, which was held at a gentleman's club. Gentleman's club is where ladies take their clothes off. Not really an appropriate business expense. I sort of queried that. I thought this doesn't, sure this is a business appropriate expense that we should have claimed. Which company just lost its CEO over the last week and a bit? A big one, because of its first ever loss in, I think, 18 periods. Owners of the Masters brand. Woolworths. Yeah, so Woolworths, the CEO fell on his sword. He said, I'm stepping aside. I'm letting someone else with fresh eyes come in and try and examine the situation. If I'm auditing executive compensation, even when CEOs leave the company, often they get a handshake payment, all right, or a parachute payment or a payment to leave the job early. I'd be picking that specifically to investigate to make sure that it's been calculated and paid out correctly in accordance with the contract because it is such a big item. All right. So in terms of judgment, with judgment sometimes you might choose large items or you might choose material items. All right. So if I knew, for example, that one of the biggest customers is also a related party, I might specifically choose to look at them because I know there is a risk that they might not be correctly stated, because the transaction might not be at arm's length, and that there are certain disclosures and risks that need to be considered when we have related party transactions. So I might choose something that's large, I might choose something that's material from a qualitative perspective rather than a quantitative perspective. If there's a new computer system, I might want to make sure that what is being processed is working correctly. That'd be part of testing internal controls. All right. Ooh, what's going on with my phone? Nothing exciting. All right. So what do I consider when I'm selecting a sample? The first thing I need to consider is I need to consider the possibility of risk. All right? Because as the level of risk increases, so as my control risk increases, then my sample size also increases. If I knew that there was a high risk of cheating, I'd probably check on more students individually during the exam. I also need to learn my materiality, because if materiality goes down, I lower the threshold of items that I think are going to be important. My sample size needs to increase. All right. I need to know how to select the appropriate population for testing. This is really important, a really important one, and one that students often get wrong. Make sure that you jump online and look at the video about selecting the right population. I give you some examples linked to particular tests. I look at what is an error if I'm doing a procedure. What sort of errors am I looking for? And then this idea of tolerable error is sort of like the materiality for a particular account. All right. And then confidence level, but that's only if you're doing the statistical testing there. And then whether you should stratify your sample. Okay. Now these, I'm not going to go through these because these are exactly what is contained on this slide here. I don't know why the slides have them both. Now, earlier in the term, I did say that sometimes I will tell you that there are auditing standards where you need to put a flag or a tab. And this is one of those places. All right. So ASA 530, Appendix 2 and Appendix 3 tell us when we should increase or decrease our sample sizes. And it gives you very clear instructions. So this is one of those places where you need to have a tab. All right, so the first one, increase in the extent to which the auditor's assessment takes into account relevant controls. So sort of number one is like, how much do I want to use controls? Do I want to rely on the controls a lot? Is control risk low? Then I'm going to collect more evidence on them. If I'm willing to accept deviations. Now, a deviation is when a control is not working. Instance in which the control did not operate effectively. Okay, so that's if, for example, in the library gate opens with my Opal card. All right, and we set a tolerable amount. So the tolerable rate of deviation is how many deviations will I allow and assume that controls are still working correctly. Could be 5, could be 10, could be 15. So if we increase the rate of error or deviation I'm going to allow, my sample size gets smaller. If I expect there to be a lot of deviations, right? If I haven't tested the controls yet, but employees say, oh, this control is crappy, it breaks down all the time, then I might want to have a bigger sample. If I want to have a lot of reliance on my internal controls, I'll increase the sample. And then this one here, an increase in the number of units in the population has a negligible effect. And that sort of is a little bit counterintuitive. So when sample sizes, when populations are less than 5,000, this is a rough guide. When populations are less than 5,000, if your population doubles, say it goes from 500 transactions to 1,000 transactions, you will almost double your population. All right? So let me write that down so it's really clear. So if the population in T1 is 500 transactions, 500, what's going on? Equals 500. And then the next year in T2, the population then becomes 1,000, for example. Oh, this is giving me the craps. Two equals, no, turn that off, equals 1,000. All right, so if in T1 it's 500 and then in T2 it is 1,000, why won't you, I'm having link app issues here, then my sample in this instance, the sample size will probably go from like 15 over to maybe 25. All right, so close to doubling. All right, so if you're using, this is statistical sampling only. So if your population starts at 500, goes to 1,000 the next year, then your sample will almost double, roughly. However, if in this situation I added another 0 and we went from 5,000 to 10,000, then your sample size might go from 25 to 30. All right, it's just something about how the statistical calculations work out, that when the sample starts to get very big, the increase in the sample size isn't very much. But for less than 5,000, there still are significant increases roughly in the sample size. I'm not expecting you to do the calculation, so you just need to know that, oh look, this is a higher risk situation, I want my sample to be bigger. Or this is a lower risk situation, I want my sample to be smaller. All right, this one here, these new slides are this slide here, this exact same information, and this all comes from Appendix 3. All right, so when there's more risk, a bigger sample. When I'm using more than one procedure to test the assertion, I'll have 2 smaller samples. If I want to have greater assurance and level of confidence, bigger sample. An increase in the amount that I'm going to allow to be material, a decrease. An increase if I expect to find more errors because I know there's a control weakness or people have told me about them, I'll collect a bigger sample. If I'm going to stratify, I might decrease, and then the number of sampling units is the same idea as the previous one. So these are all really self-explanatory. All right, this is the bit that's important, all right, for students, and it's the evaluation of the sample results, all right. So when I'm testing controls, I'm trying to actually figure out whether the controls over the period have been effective over the entire year. So has the library gate been working correctly to open and close over the entire period? If it has been, I can keep my control risk assessment the same. If the control has broken down a lot, then I may need to change my control risk assessment. When it comes to doing substantive testing, and that's what this one here is talking about, and I can't spell substantive. All right, so substantive is this one just here. All right, that's that bit there. I want to consider whether the account is fairly stated or not, and that means, does the account meet all of the assertions? All right, so whether it's a transaction or a balance, that's what that fairly stated component means. All right, so let me just link some of these together. The top one, when I'm testing internal controls, I'm looking for the rate at which the control doesn't work correctly. When I'm doing substantive tests, I'm looking for misstatements, right? Dollar value errors in terms of, does inventory all exist? Have we recorded all of the accounts receivable or all of the accounts payable? Again, let me just save the project to make sure it... Okay, so this top one up here is my controls testing. All right, where I'm trying to make sure, did the control work correctly over the entire year? The second one is the projecting errors as if I'm doing substantive testing. All right, there I'm trying to find out whether everything meets the assertions or not. So I might remove any unique errors. So unique errors are one-offs, things that were like, somebody broke their finger at softball or something, or they had a home handy person accident and their finger's wrapped in a big bandage. So therefore, when they're doing journal entries on the keyboard, they've accidentally typed in the wrong amount. And that was only for a week or two where they made some mistakes. Or is it somebody has been doing the same error over and over and over again? That happened at one client where somebody had been doing cash accounting in their accrual accounting system the entire time because they didn't realize that there was a difference. This was like a 68-year-old accountant who hadn't realized that we'd moved to accruals and was expensing everything. Oh yeah, we bought a big asset, expense, cash going out. So I need to project the error using this formula here, all right? And that formula is that I take the dollar size of my error, the dollar size of my sample, and then project that to the population. So let's do that as an example right now. All right, we have a sample worth of, we've got a sample worth $5,000, and I find $50 worth of error, and the total value of the account, and really this is the population, is 1 million. So what is the projected amount? The projected amount is $50 divided by 5,000 times by 1 million. All right, so that's the projected error. So the projected error actually works out to be $10,000. That's a 1 there. All right, how do I know if this is material or not? What if I told you that materiality, or the tolerable error for the account, was 5,000. If the tolerable error for the account is 5,000, is this up here a material misstatement? Yes. All right. So I'll change the colors here. We would say, yes, that is a misstatement. That's material. Okay. What if I said, well, hang on a second. What if materiality was 15,000? Whoops, I wrote 150. All right. So what if materiality was 15,000? Would it be material or not material? 10,000 less than 15,000? So there in that instance, we would say not a material misstatement. All right. So it all depends on what this amount here is. Okay. And that might change. You might do some testing of internal controls, and originally you might set it at 15,000, but you test your internal controls and you find the controls are really crappy. There could be lots of errors and you might drop it to this amount here. Okay? Now, of course, the client is going to say, well, you only selected a very small sample, $5,000 worth out of 1 million. You might want to test another sample to find out if the error is still the same, the rate is still the same. And you'll also investigate the cause. Again, if it's, the person who does this transaction went on holidays for a week and then whoever filled in just didn't know what to do and did something wrong. Or was the person always making the same mistake? Or the system making the same mistake? Now what happens if you stratify your sample here? What's going on here is that you take your error, divide it by your sample, multiply it by the stratum, and you get the projected error for each individual line. You don't add these up and do the calculation this way. It just doesn't work that way. So you do it for the individual strata. And you'll notice here we have overstatements and we have understatements in the accounts, and you'll notice that they actually net them. So normally if I find an overstatement and an understatement when I'm doing a test, in the end I will net those off. And we'll do some examples of that a little bit later on in the course. Okay, so I need to figure out a plan. All right, and I know that my audit strategy is driven by my audit risk model. Okay, we know this a few different ways. So I have to gain an understanding of the company and come up with a plan and decide on whether I'm doing tests of controls, which is when DR is high, or substantive procedures, which is when DR is low, or a combination of both of those if DR is medium. All right, so you might do some controls and some substantive testing. So we know this table already, that's nothing new. If I'm testing my internal controls at the preliminary stage, when I'm gathering information about my pyramid, all right, I make my preliminary assessment and I say control risk is low, medium or high. Then I'm going to test those controls to see if they were operating as they were designed. All right, so here I'm testing to ensure controls operate as they are designed. Okay, so that's the purpose of doing the testing. And at which point I could, if the controls are working correctly, I'll confirm my control risk assessment and do less substantive testing. But if I find controls are crappy and they're just not working properly, on paper they look great, but then when you get to actual people doing them, it's really terrible, then you might increase your control risk, decrease your detection risk, and then shift to a more substantive approach. That happened to me once when a company said, oh, we got all these secure passwords, this person has a password, etc. And then when I went to actually test the process, I said, what happens when you forget the password? And she's like, oh, well, I've got it written on a Post-it note right here, right next to my computer. I'm like, oh, so what happens when you go away? Oh, someone logs in as me and uses my password to do the transaction. At which point you go, so there was a control, but it's actually not operating as it was supposed to. Okay, so with these, the observation and inquiry are things that you're going to be doing at the preliminary stages. All right, when you're trying to make that initial control risk assessment and fill in the pyramid. So you're going to talk to people, tell me about the process, show me how you do a processing of an accounts payable, payment to a supplier. The reason why I can't use observation as a test of a control over the entire year is because I don't have a time machine where I can go back in time and sit there and watch the accounts payable clerk for 365 days to make sure they're doing the right task. And even if there's a video camera videoing employees, I'm not going to sit there and watch 365 days worth of tape. It's not terribly exciting. So this observation and inquiry stuff is only going to work in that fact-finding stage. Because as soon as you observe someone, if you know that the proper way is to do 5 steps, but you know there's a shortcut way where you can do 2 steps, when someone's watching you, you're going to do the 5 proper steps, do all the right things, and then when someone goes away and they're no longer watching you, you're going to do the shortcut method. All right, so that's not a great test. The things that we're going to do more of is these ones here. All right, look at documents for authorization, signatures, stamps. Check that things have been checked by the right people at the right date. So, JB Hi-Fi, you make a sale or you want to give a discount bigger than a certain amount, the manager has to authorize. Can I see that authorization in the system? Bank reconciliations, for example, should be checked by somebody else other than the preparer at the end of each month. It's quite common, and I did detect this one time. I went to the client and I looked at, they gave me the stack of bank reconciliations. They knew I was coming, and at my first interview with them, they're like, here's the bank reconciliations. I thought, that's a bit suspicious. I haven't even asked for them yet. And I noticed that the approval stamp and signature of the person who's supposed to review it was in the same spot, in the same pen, on 12 months worth of bank recs. And I suspect, they didn't admit to this, but I suspect what they did is the day before I turned up, they've quickly done all the bank reconciliations, or maybe they've gathered them all in the one place, and the person who's supposed to check them has gone stamp, sign, stamp, sign, stamp, sign, stamp, sign. All right. Who works at a company where you have to deal with auditors? A few people? And have you found yourselves ever madly getting stuff filed and all the paperwork done correctly before the auditor gets there because you know they're going to check it? Right? You don't do it throughout the year, but you do it that last minute. So there is some, obviously, risk that people could be doing it at the last moment. But at least it's being done, and hopefully they're doing it correctly. I discovered that the person who was doing the signing wasn't actually checking the outputs of the bank rec because there were all sorts of errors in the bank reconciliation that they had approved and said had been checked. So you've got to be quite careful. In terms of which controls to test, we won't play the video, but a company could have 25 controls. As the auditor, your job is going to be to select the key controls to test. All right. Now, which ones are the key controls? The key controls are the ones that usually, a key control is one that provides a strong level of control for an assertion. Right, so there might be a number of different controls over making sure that the customers are charged the right price. The main one might be when you scan an item, it pulls the barcode and matches it to a master price list. There could be 3 other different controls, but you're going to pick the key control for that assertion. So that means that generally you do anywhere between 4 to 7 controls are tested. All right. You certainly don't have time to test all 25 controls in a process. You're only going to test some of them, the ones that you think do the most towards providing assurance over that particular assertion. All right. If it's high risk, you might do more, but usually 4 to 7 is the number of controls that you test. When we're doing substantive procedures, I'm going to cross out some information here because it's actually not relevant at this point. All right. So don't worry in the textbook where it talks about that there are different sorts of substantive procedures. Just know that a substantive procedure is some method to collect evidence about whether an account meets any of our 4 or 5 assertions. All right, mix and match of the 9 different procedures. Here, this comment about analytical procedures, I tend to use, and in practice, analytics tend to be used as a bit of a radar. All right, I've got a whole huge account to audit. And let's say I'm auditing a company that sells mandarins. Coming to the end of mandarin season right now. So mandarins are a winter thing. So when we expect most of their revenue? May, June, July, August, September. Right? Pretty much end of September is the end of mandarin growing season, and then you have to move to imported mandarins. My 2.5-year-old is addicted to mandarins. Loves, loves, loves mandarins. And when we get to the end of mandarin season, it's a very sad time. There are tears, and there are tantrums, and there are big crying fits about how oranges are not a good substitute for mandarins. But if I'm auditing a mandarin company, and I looked at revenue per month, and I saw increasing revenues in May, June, July, August, September, lower revenues the rest of the year, but then suddenly in November, there's a big spike in revenue, right? I've done an analytic where I've compared data over a period of time, and I've noticed something unusual. I'd go to the client and say, what are all these sales in November about, right? You've got no mandarins to sell. It's mostly expenditure in these months when you're pruning trees and applying fertilizer and improving irrigation systems. So what is this about? It could be a fraudulent transaction, it could be they've sold part of the business, but it helps me identify what might be unusual. Same with my inventory turnover to find obsolete items. You know, if I looked at Woolworths in their supermarkets and there were items that had turnover of less than 1, I'd be really worried. All right? Especially if you're looking at fresh produce, meat, bread, eggs. I would expect there the inventory turnover to be more like 52, right? I'm pretty sure nobody wants to buy chicken that's more than a week old. So we use our analytics to help us design greater substantive tests. There's some examples there. There's some videos in your folder this week about how we design tests. This is what we're going to spend the second half of the term doing. All right. Anybody here really creative, like being creative? Paint, draw, make music? No? No? No budding Picassos? No design? Well, you are going to become artists. We're going to become audit artists after the midterm. So we're going to learn to design, and that's a really important component of this course. And that requires creativity, and it requires, like there are examples in the book, But realistically, I'm going to tell you, don't look at those examples. Number one, they're badly written. And number two, looking at somebody else's paintings isn't going to help you be a better painter. All right? Instead, you need to practice the doing part of it. And that's really why audit is much more of an art than it is a science. We have some basic rules, but there's lots of fluctuation and lots of grey area for judgment in there. All right, so with those examples. Okay, now in terms of selecting our sample, samples must, when we're designing our samples, we have to consider these components. The nature of audit testing. So what are we going to test and how are we going to use, what procedure are we going to use to gather evidence on the existence of inventory or the occurrence of sales? So nature is really important. This is when ASA 500 says you must collect sufficient and appropriate evidence, all right? This idea about the nature of tests, wrong button, is all about picking what is appropriate, picking the right procedure. And we'll learn about that as time goes on. Don't stress out too much about that now. The next thing we need to think about is when. Okay, when do I need to collect the audit evidence? If I'm doing a stock take of inventory, could I do a stock take of inventory in September for a 30 June year end? It's not really going to work. So some things are time specific, like inventory stock takes that must be done at the end of the financial year. 30th of June, 1st of July. All right? No getting around that. That is what always has to happen. All right? But sometimes I can do tests at other times of the year. All right? So what most auditors do is in the period from March through to June, they will go to their clients and they will audit 3/4 of the year. All right, they'll test internal controls for 3/4 of the year. They'll look at sales transactions and expenses. So they'll audit 3/4 of the year in that March to June period. And then at the end of the year, they'll come back and they'll audit the last quarter. Anything that must be done at the end of the year, like cut-off testing or inventory testing, and things that are at high risk and accruals. All right, and that's a timing thing because we're under huge time pressure. Every company under this, or almost every company, has a 30 June year end date, which means we only have 8 to 12 weeks to get our audits done. Most audit teams have anywhere between 4 to 6 clients. An audit takes 8 to 12 weeks. So unless you can clone yourself, you need to spread that work out over time. And certainly the auditors do work 14 to 16 hour days around the end of the financial year in that period. They work a little, more regular hours here, but we're under a time crunch and it's a regulation thing. Corporations Act sets the dates for submissions, so we have to be done by that particular period. And it doesn't make sense. You can't casually hire 50 extra auditors for 3 months of the year, so they have to spread it out. Now the last one is the extent, and the extent is really the sample size. All right. How much evidence, are we going to collect? And I said, of course, you guys don't need to know how much exactly, but you need to know when to collect more and when to collect less evidence. All right, when we draw conclusions, we will often find instances where controls don't work or when we find dollar errors in the accounts, and we will typically verbally tell the client about these as we find them, and then at the end of the audit, we will provide the client with something called a management letter, and that's under ASA 260, in which I'm communicating the findings of my audit. I give them a list of all the errors, a list of all the control weaknesses I found, a list of the frauds that I verbally told them about before, but then I give them a written document right at the very end. And then we go into a negotiation process with the client. So no client ever says, yay, I'll make all the changes you suggest. Instead, we go through a negotiation process to work out what they will adjust and what they won't adjust, and then what sort of audit opinion I'll give them. All right, we have to document. Documenting is really critical. Who can remember exactly what they were doing 3 weeks ago for lunch? Unless you've written it down in your calendar somewhere in your OCD. I can't remember what I had last week for lunch, let alone 3 weeks ago. So I'm not going to remember judgments that I made 5 years ago on an audit case when something goes to court. So documentation is critical. You need to document what you're doing, why you're doing it, the conclusions you make, the evidence you found, the errors or deviations that you've discovered. All right? Because if something goes wrong, they will take your base data, they will give it to an expert and ask them to make the same judgment to determine whether you acted reasonably and with due care and skill. So the more that you can document, the better. All right? It's legal protection, it's really important. Plus, if you're doing the audit and you're halfway through and then you win Powerball and you're like, goodbye suckers, I'm going off to the Bahamas, somebody needs to be able to follow in your footsteps, to pick up the audit where you left off and keep going forward. There's nothing worse than opening an audit file where somebody has written like 3 words and then a conclusion and you don't know how that part was done. So the documentation is really, really critical. There's different types of files. We'll mostly be working in the current file, and you guys are actually going to be doing some audit documentation later on. Important notices, not that any of my part-timers ever managed to come to consultations, but all consultations are now down on the goods line because it's obviously daytime. Unless the weather is bad, then come up to level 7. Next week, the next 2 weeks, consultations will be in the afternoon because my discipline group has some meetings in the morning. Monday the 5th of October is a public holiday. Yay! Which means no consultations. There will be some consultations during the exam break for you guys. And I will still be, even though I'm going on holidays, I'm pretty sure once a day I'll probably still log on to Facebook and answer questions there and on UTS Online as well. Or I'll get Nelson to do the UTS Online ones. So thank you very much, everybody. Congratulations on making halfway. Week 6 is halfway, so you're halfway through the course. After this week, the course actually starts to get easier. All right, so we're not going to be really learning anything new in the next few weeks. We're going to be doing assertions and internal controls and procedures and sampling and populations for the next 3 weeks until we hit the week about completing the audit. So it's actually going to start to get easier. So if you've made it this far, congratulations, you're all on track. Please also remember to submit your field studies by I think it's 11:59 tonight. If you missed that and you want to send me an email, just email it to me. That's not going to be a huge issue. So thank you, everybody. Have a good night, and I will see you all next week.